All right, welcome to another episode of JYR Trades. I am your host Jesse, and as always, it is a pleasure to have you guys join me. Okay, what a day it was today. Today's title is Nasdaq Trap Exposed. Inside Value Fakeout. 200 plus points collapse in real market intent. All right, guys, as always, okay, remember that everything that I share on this channel is for educational purposes. Nothing is financial advice, but I will say this. If you want to learn how to trade market structure, auction theory, equilibriums, liquidity, in other words, if you want to learn how to trade like the big institutions do without fancy indicators and to learn the proper market language, then you're in the right place. As always, if you want to join me on my journey, because this is my journaling journey, okay, if you want to join me, then hit that subscribe button. It would mean the world to me if you can learn along the way. All right, with that said, let's go ahead and get started, guys. Today is April 22nd, Thursday, and let me tell you what a day it was today. Today, once again, the Nasdaq, we're going to talk about a trap that got exposed, inside value fake out, and 200 points collapse. Okay, all right, guys, so today's session was a perfect example, and I'm giving you the quick description here before I talk about overall today. Today's session was a perfect example of why understanding market intent beats relying on indicators. You need to understand that. Okay, we open inside value, signaling a potential rotation day, but instead of blindly trading noise, I focused on structure, okay, liquidity, and where price wanted to go, because price always wants to go somewhere, and that's the big question. It's not about do we trade up or down. Where does price want to go? After a slow grind higher and push above value, classic trap behavior, the market reversed hard and delivered a clean move to the downside. In this video, I'm going to break down how to read inside value versus expansion days, identifying the trap moves at value area high and New York Open, why patience beats early entries, and how I executed and scaled into a high probability short. Okay, the shift from indicator dependency, true price action understanding, and the real-time growth, the real execution, the real market structure. This is what this is about. If you're serious about trading Nasdaq futures, this breakdown, guys, will hopefully help you see how you see the market. All right, let's go ahead and get started here. All right, here we go. All right, so guys, let's talk about today. So where did market open? So this is New York, this is London right before market is about to open. And as you can see, all right, the first thing I'm going to ask myself, are we inside or outside value? If you've been following me for a while, you know that I represent my New York values area high and lows by these two white lines right here. Okay? And so right here, I have my New York value area high, New York value area low. So that right off the bat tells me, ladies and gentlemen, that we are off to a rotation type of day. Now, are we going to rotate all day? That's the next question. So what we got to look at is where are our POCs and where are our mids in location to each other. First things I want you to notice is, one, we have our POCs, okay? We have our POCs actually leaning south. So what that tells me, ladies and gentlemen, is that at some point price is going to go to the downside. But before I can actually determine that, the first thing I look at that before the POCs is I look at where are the mids in reference to the POCs. And if you look here, you can see this purple line is my London mid. And my London mid is above my POC here. In fact, there are two POCs here. I have New York POC and I believe it was London POC. And if you see here, you see that we have London mid above them. So that's telling us right there and then that we have a possibility of a trap going up and then eventually coming down. If you look again at the other POC, which is the Asia POC, again, we have our Asia mid above it, telling us once again that more than likely we're going to have some type of trap going up and then coming down. All right. So let's look at what happened with the opening. Okay. And I got to tell you, all right. So first things first, guys. When price opens, it opened up slow this morning. The candles were controlled. There was nothing. There was no sense of urgency here. All right, and you got to remember that on a rotational day, all right, we have to be extra patient. All right. So here we saw price opened up, and right away within the third candle we saw post migration. All right, this is our auction zero from the previous day, migrated up here, and that right there, when it opened inside the cloud, automatically that is telling me that we're opening in an indecision type of day. Okay, but remember what I said earlier. I felt that the trap was going to go first to the north, right, and then it was going to come south. So I initially saw this right here going up, and I gotta tell you, I was tempted to take a long and exit here right at value area high. Remember that when price opens on a rotational day, usually price tends to go to the closest value area. In this case, it was value area high. All right, this green line here represents New York Open, by the way. All right, so price started going up, and I gotta tell you, for a moment I was a little doubtful. I'm like, are we gonna really rotate? Because once we saw post migration, I put my zero on the fib here. Okay, on post migration, price went all the way almost to the 87. Right now, I gotta tell you, I initially, waited for it to come back down. When it started coming back down, I took a trade. I started taking it short. But I gotta be honest with you, I'm starting to sweat a little bit here because I saw that it was kind of hesitating. But again, my instincts, everything that I've been studying about market structure was telling me that it was gonna come down. We were on rotation mode. So as soon as it started coming back down, guys, I increased my size right around here. And what did I target, guys? I actually targeted my Asia mid here. Okay, now if you want to know where is a safe place to target, remember liquidity. You want to get the liquidity stack. We have our 3 POCs here, our 2 mids here, and if you measure, say with the fib, and you measure from beginning to end, okay, do not count the value area high or low unless it's like really, really close. But in this case, this is enough. And the reason I'm showing you this is because I want you to understand. Look at the center of the liquidity stack right here. It's the 50. And what was here? The Asia mid. Okay, the Asia mid. So what does price do? Comes and tags the Asia mid, one candle right here, and it starts doing indecision. Okay, starts doing indecision. And I gotta tell you, here is my New York Open line. At one point, I thought price was going to start already moving to the downside. It did not. Okay. In fact, I saw that at one point, it actually went up to New York value area high. Okay. And what happened? Started coming back down, hit my New York opening, and after that, it took off. Now, I need you to understand, this looked like a real move, and it was a decent sized move. When you look at the overall length, it was a good 135 points. That's a solid trade right there. Okay? And so, to be quite honest with you, I mean, you can take the trade from here, perhaps, to here to the value area high, and if it continues, you take partials, and you target the one. That would have been a good safe trade right there. All right, now I'm gonna be honest, I took another trade, and I'll tell you, it wasn't in New York AM. It was not New York AM. Okay, so price went up, started coming back down, came back. Notice it came back to the New York value area low, and it was right here, right around New York Open. I got a little bit excited here. I saw this move. I saw this second candle, and I should have waited. I should have waited for a rejection and then to it to come down. I did not. And what happened? I ended up taking a loss here. Okay. Thankfully, it wasn't nowhere near the profit I had earlier in that day. But I was determined because I knew that price at some point was going to come down based on the market structure. Okay. Remember, I don't have fancy indicators telling me to buy or sell. Okay, I'm looking intently on market structure. And what does price do? It actually starts coming back down. At some point, comes back hard, and that's when I decided to get in. Okay, at some point, I took a trade. Okay, and to be quite honest with you guys, okay, I want you to understand this here. Look at the fib here. There is no business. Okay, there was no business to take a short here. And I'm gonna tell you why. Look at our fib right here. I'm sorry, this is not the fib. This is the liquidity stack fib here. But if you look here, ladies and gentlemen, our zero is here. When would I say I could take a trade? Well, even at the positive 12 here, now we have our New York opening. Once it crossed the New York opening, it was game on. And from there on, I mean, really at, let's say, auction 0, oh man, targeting the negative 128 points. But if you were seeing today the market, what does the market do? Comes back up to value, gets rejected at value, and booyah, starts coming back down. Went all the way to the negative 2. Okay, on our fib. What a day. What a day. Remember I said earlier that I was looking at market structure. It was telling me there was going to be traps. It wanted to push to the downside. There was going to be a trap to the north. And I got to admit, at some point when I saw this here, I'm like, maybe I was wrong. Maybe. But I was intent on seeing it coming back down. And when it started happening, that's when I knew the move was to the downside was real. Now, what mistake did I make? Again, look at the fib. If I'm gonna really commit to the downside, guys, using the fib, it's once it goes past the 12 or even the 50, that's when it's really could have still been there. But the New York opening right here, guys, once it started coming back down here, remember earlier in the morning session, I thought this was maybe the move that was going to start coming back down. It flirted with us, okay? And what it did, it trapped short sellers here. And it went up. It gathered enough liquidity around here, okay? And that's when it's made the move, okay? That's when it made the move, okay? I need you to understand that the market is going to make traps on rotation days, and you have to learn to read the structure. And I'm beginning to see more and more when we see our POCs, okay? When we see our POCs, when we see our POCs actually, again, pushing down in our mids above them, that is telling us that more than likely we're going to have some type of rotation, but pressure to one side, okay? But it's going to take a while. It's not going to happen right away, okay? One thing I want you to understand is that today, guys, I did wait. I didn't rush, specifically that first trade. I didn't rush it. I could have taken along here, maybe get a scalp, but I ended up coming back down here, and once again, right here, this was enough to walk away for the day. All right, and I kept thinking, okay, it's gonna go past New York Open at some point, come back down. That's our move, and it didn't. It went up. It trapped short sellers here, and once it started coming back down, that's when the move started really happening, right? All right, so again, real move, momentum, broke hard through the New York value, all the way through the POCs, rejected at the once it went past value area low, came all the way down, guys. Okay, you know, one of the things I'm gonna finish off this video by saying, guys, is that what I'm proud of today is that I didn't rely on indicators, to be honest with you. Yes, I have this particular setup, this dashboard. This dashboard helps me put my inputs, my value in the mornings, and it does give me an idea here, okay? But in the end, the dashboard doesn't replace my intuition, my thinking. And in the end, the dashboard doesn't hit the click, the sell, or the buy buttons, okay? It's really up to us to again learn the market structure. Okay, I wasn't looking at indicators or EMAs. I wasn't chasing signals. In fact, I this morning I took off some of my Remitar EMAs here. I took off my Remitar 2.0 and 2.1 because I'm really beginning to understand market structure better. I was reading the structure. I was seeing the liquidity. Okay, I was seeing the liquidity. I was seeing the intent, where the price want to go, and that's something that I've been working on for a long time. Now, I'm gonna be honest with you guys. It's not perfect yet. I'm still not perfect. Okay, there are still things that I need to refine. Timing my entries a little bit better, trusting the move earlier, because there are times that I still like struggle. You know, when I saw this right here, this particular move, and I saw that quash, it went through VWAP, I was like, is this really the move here? You know, and I still hesitated. But at one point I got in and it hit my target. Okay, I gotta filter the noise better. Okay, but I can say that clearly there is progress. Okay, and understand, guys, that this is what trading is really all about. Okay, not chasing signals, but understanding what price is trying to do. Okay, and today honestly was another step forward. Really was. Really was. All right, with that said, guys, I hope you enjoyed this episode of JYR Trades. I hope that you're beginning to understand market structure, that you are following, that you are beginning to see bits and pieces. Every day, every week, you learn something. Okay, every single week. Just this week alone, I'm telling you, measuring the stacks, and going with the 50. Okay, it's giving me where the move wants to go, at least in the early part of the morning. Okay, with that said, guys, I hope you enjoyed this one, and we'll see you to the next one.